Hello everyone. This is the pre-market report video for today, 24th September 2024 for the Indian stock market in terms of Nifty and Bank Nifty. Last Friday in the aftermarket hours, RBI released the September monthly bulletin. If required, please read it. I'll provide the link in the description and in the pinned comment section. In that, it covered lot about economy, inflation and trade data, etc. In addition to that, it also covered about the important banking issues like NPA and deposit growth. The document does not provide direct comparative data or the value between PSU bank and the private bank. Rather, it mentioned for the overall banking sector. Like the gap between credit and deposit growth is narrowed now. And in June 2024 compared to June 2023, the term deposit increased 66.9%, which is really very good. Honestly, I don't understand how much the deposit market expects to further increase. Just for comparison, in June 2023 compared to June 2022, the deposit was increased only by 33%. This year, it's almost doubled. Gross NPA wise, overall banking has the lowest value since 2011, 2.7%. Here in the document, they particularly priced the PSU banks for showing the biggest improvement, and as per the bulletin, at present, the gross NPA of PSU bank is 4.4%, and in the stressed scenario like recession, economic slowdown, etc., the gross NPA might increase to 5.1%. This is okay, 4.4% to 5.1% in the stressed scenario, very good minimum increase. Before yesterday from its peak, this year PSU bank corrected for over 15%. Now, because of that reasonable valuation and this very promising RBA bulletin made the PSU bank whole sector to increase near 3.5% and led the rally. Yesterday, 12 out of 13 major sectors closed positive. The only sector that closed negative was IT. I'm guessing it might had the profit booking. About institution, in the cash market, both FII and DII net bought the shares together for around 1,400 crore rupees. And then the derivative side, I just want to highlight about the future index. In Nifty, FII bought and sold each 6,000 crore rupees. And in Bank Nifty, they bought for 2,500 crore rupees and sold for 1,800 crore rupees. So, 700 crore rupees more positive on banks and neutral stance on Nifty. Here, please note, this is not the overall status. This is just the yesterday's change stance. Now, because this week is monthly expiry, this high sold value in Nifty might be just next month rolled over future market open interest. Hence, in plain sight, just based on yesterday's change and trade in open interest, it looks like FII is positive on banks and neutral in Nifty. But I don't think they will be this much explicit. So I'm assuming if Bank Nifty falls tomorrow on its expiry day, probably on the following day, Nifty might increase. Anyway, overall, this is my open interest volume report conclusion. Retail traders and FII are expecting the market to go up. On the other hand, DII and professional traders taking more bearish position. In that, the data showed FII was more bullish in Bank Nifty than Nifty, but as I said, in actual, they might be opposite. Please note, disclaimer, it's not a recommendation. I'm just sharing my view. At present, I'm having zero open position. Based on today's market opening, I'm planning to decide. Please don't make trade based on this. So those were the quick takeaway from yesterday's Indian market. Coming to US, their manufacturing PMI data expect to trim its contraction, but again the data came as opposite. It contracted more. However, on the other hand, service PMI and composite PMI data increased than that of the expectation. Here, because US is major like 70% service driven market closed mild positive. At the end of the day, Dow Jones increased 0.15%, S&P 500 up by 0.28% and Nasdaq up by 0.14%, and about VIX, it dropped around 2% and moved to 15.9 from around 16.2 on the previous day. In case of oil, it's roughly unchanged. At the time of this video, WTI crude trading around $70.5 per barrel and Brent crude closed just below $73.5 per barrel. Coming to Indian ADR, both IT stocks closed negative in line with the Indian market. However, please note this recovering US service sector PMI is positive for IT stocks. So actually Accenture share price increased last night near 1%, but for some reason it was not reflecting in the Indian ADR. Then regarding banks, HDFC Bank looks like further mild positive, but for ICICI Bank it's still having negative 1% arbitrage. So for the moment it seems neutral for banks and negative for IT sector, but based on the news IT might be positive when we trade. Then in case of GIFT Nifty at 3 AM Indian Standard Time, it closed at near 25,998. Given the present premium negative 15 to 20 points to the spot Nifty, which kind of indicating 30 to 40 points gap up opening. So that's what happened across the global market yesterday. Before the summary, I like to highlight one thing. 5 to 6 months ago, SEBI released the paper that in India, in the option market, 9 out of 10 option retail traders were losing money. Now again, yesterday they released more stats like 93% of individual retail F&O traders made loss during the last 2 financial year, which is further negative, and also they said only 1% of retail people are making profit over 1 lakh rupees. To be honest, it's alarming and difficult to believe, so I'm conducting the poll in the channel's YouTube post section. It's very anonymous, nobody knows who vote which, so please consider voting in the YouTube post section, like how much profit you are making in the option trading this financial year so far. After that, tomorrow I will discuss the outcome so we can confirm whether SEBI is telling the truth or not. As a summary, US market closed positive and GIFT Nifty indicates the gap up of 30 to 40 points. But at present, we can say the global momentum is little bit cautious because of the recent rally. However, fundamentally and news-wise, both IT and banks looks positive. Let's see. Then, as per stock open interest, Eicher Motors, Dauber, Bharat Forge, L&T and Crompton got an increase in open interest along with a decrease in price, which means these stocks got the short built up. Similarly, Ipeca Lab, PVR Inox, Bajaj Auto, Hindustan Unilever and L&T Tech got an increase in open interest along with a price increase indicating the long build up. Regarding the things to look out, before our market opening, Japanese PMI data is due. Then there is not any that I'm aware of during our market hours. However, in the night, US consumer confidence data and new August home sales data are some of the items we need to keep an eye out today. Coming to technical, Nifty opened 80 points gap up and throughout the session, despite some consolidation, it maintained the momentum, then closed at near 25,950. Thus on the daily chart, Nifty formed a bullish candlestick pattern with higher high higher low formation for the third consecutive session. However, for the second day in a row in the daily RSI, Nifty is on the overbought zone. Hence, considering all, we can expect Nifty to move above 26,000 mark soon with the next resistance around 26,200. However, if it fails to surpass 26,000 mark decisively, then Nifty may consolidate with immediate support at 25,800 and crucial support at 25,500. In case of Bank Nifty, it opened 120 points gap up and continued to increase for the 8th consecutive session. Then for the first time, it closed above 54,000. Thus on the daily chart, similar to Nifty, Bank Nifty also formed a bullish candlestick pattern with average trading volume. Hence, looks like Bank Nifty is heading towards 55,000 with support at 53,350 to 53,500 mark. According to monthly options data, the maximum call option open interest was at 27,000 strike, followed by 26,000 and 26,500, with maximum new call option writing at 27,000 strike, followed by 25,900 and 26,400. On the put side, the maximum open interest was at 25,000 strike, followed by 25,500 and 25,700, with maximum new put option writing at 25,900 strike, followed by 25,800 and 25,400. Thus, from options data, it indicates that 26,000 is likely to be the next resistance for Nifty with immediate support at 25,800 and strong support at 25,500. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment decision based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.